There are 9 million U.S. citizens living outside the United States who continue to be subject to U.S. tax. Joining me today is John Richardson, one of the leading tax advocates for Americans abroad. We will discuss the challenges faced by this group and the prospect for change, both good and bad. This is Taking Shelter. I'm your host, Peter Paulson. Taxation of U.S. citizens abroad is a new topic for this channel, and we are fortunate to have with us John Richardson. John is a Toronto-based lawyer who is a dual citizen of the U.S. and Canada. Welcome to the show, John.
Well, thanks very much for having me. It's great to be here.
So for the benefit of our audience, I want to put the value of John's insights into context. When it comes to the burdens of expatriate taxation, there's no louder group of people than the expatriates up in Canada. And there is no louder person in Canada when it comes to this issue than John Richardson. So it's not a stretch to say, John, that you are one of the most informed people in the world on this topic of the expatriate tax burdens. So with that modest introduction, why is there a need for 9 million people to have to speak up about their tax situation?
Well, the answer is very, very simple. The Internal Revenue Code is written in such a way that anybody who happens to be a U.S. citizen is subject to worldwide taxation from the United States, even if they live in another country, have always lived in that country, and would be a tax resident of that country. To put it very simply, we can get into the details. The application of those rules to people in Canada and other countries outside the United States disables those people from normal financial planning. As of the last few years, it confiscates their assets. It leaves them living in a constant threat of penalties, all that sort of thing. And to put it simply, it absolutely positively has got to come to an end.
I was an expatriate 20 years ago when I lived with my family in Singapore, and I ran a department that prepared hundreds of tax returns for U.S. expatriates living and working in Southeast Asia. I don't recall a lot of complaining on the tax system back then, and we expatriates are very good at complaining. What has changed in the last 20 years?
Well, it's a completely different world than it was 20 years ago. The first point I would make is that it wasn't until the Obama administration began its sort of what I refer to it personally as the FBAR fundraiser around 2009 that there was even a great deal of awareness of the reach of U.S. tax rules. And, you can safely say, and this may still be true, that very large numbers of U.S. citizens living outside the United States were not compliant with their taxes. So we have the awareness, which was largely, I think, influenced by FATCA, but we also have, some very substantive changes in the rules. Some of these, the CFC rules, the GILTI, the transition tax, the whole PFIC regime didn't exist really 20 years ago. It may have been in the Internal Revenue Code, but nobody knew that it was there. This was, again, a discovery by the Obama administration, which, essentially penalizes normal day-to-day mutual funds, if you can imagine. As a tax lawyer, you would also know that in the late 90s, the foreign trust rules in the United States were changed and rewritten in a way that, are interpreted to sweep in all kinds of arrangements in other countries. So, there's a few.
And John, let's talk about the relationship between the IRS and expatriates. You recently co-authored an in-depth article on efforts to get the IRS to be more responsive to the needs of U.S. citizens abroad. You titled the article, Mission Impossible, Extraterritorial Taxation and the IRS. Give the viewers some insight into the mission and why it seems impossible.
Well, first of all, I want to give a shout out to Laura Snyder, who was actually, in my view, the primary author of that article as a result of her work with the IRS. It's completely unreasonable and, frankly, I think impossible for the IRS to even do this. In fact, as I've said many times, in my opinion, the IRS is actually the single biggest victim of what some would call the citizenship tax, but I would call the extraterritorial tax regime. no American abroad understands this. They try hard to comply. They can't. There is no contact with the IRS whatsoever, as you pointed out earlier. The IRS doesn't even have international offices anymore. There's no way to contact them. And, we're left with a system where those who, try hard to comply invariably have a degree of problems. And there are many people who want to comply but can't comply because they have no idea how to do it. There's nobody to call the IRS. And frankly, I think that the IRS ought to be the biggest cheerleader for bringing this thing down.
Yeah, I think, John, a lot of the challenges come back to this concept of citizen-based taxation. Cross tax law has a close relationship with the American Citizens Abroad organization. They are encouraging members of Congress to move from citizen-based taxation to residence-based taxation. So under residence-based taxation, U.S. citizens living abroad can avoid paying tax on foreign income without giving up their U.S. citizenship. And John, if that sounds radical, that is the way that it works in almost every other jurisdiction in the world. They use some form of residency-based taxation. How do you rate the chances that the U.S. will get on board with that rest of the world with respect to taxation of their citizens living outside the country?
Well, I think that it's so crazy. It's so unjust. I mean, it's based on place of birth in most cases only. I mean, it's unjust. It's inhumane. People do not choose where they're born, and as we all know, sooner or later, all of these gross injustices, and frankly, I do agree with the camp who sees this as a human rights violation. All of these things eventually come down, and this will end as well. The question is how soon. Now, I don't think that it's going to end soon enough to save the people who are currently being destroyed by it. And their only recourse is to renounce U.S. citizenship. It's what they should. Frankly, it's what they have to do. People are not renouncing U.S. citizenship because they want to, especially at the prices you have to pay to do it, right? They're renouncing U.S. citizenship because they're forced to.
Well, and today the challenge is finding an embassy that's open and willing to allow you to renounce. And with, I guess, a follow-on question to that, John, we're talking about capital gain rate increases. We're talking about state income tax increases across the country. We're talking about other tax burdens on the rise. Is the dam about to break on people renouncing U.S. citizenship?
People who renounce U.S. citizenship fall into two categories. The first are those who are not what are called covered expatriates, and basically, as long as they're tax compliant, can expatriate without being subject to the exit tax. Covered expatriate would include having a net worth of over $2 million. It would include it, but there are other reasons why somebody can be a covered expatriate. The people who are forced to renounce are largely Americans abroad, many of them who live in, high-cost cities outside the United States, Toronto, Vancouver, London, what have you. And, an example I often use would be, say, a University of Toronto professor who has a modest house in Toronto that, could be worth over $1 million, and then has taught at the University of Toronto for, say, 35 years and has a pension that's worth over $1 million, putting that individual over the $2 million net worth. Now, many tax advisors describe the exit tax rules as a deemed sale of assets. It includes that. But the really important thing for Americans abroad is if they have a pension that is not a U.S.-based pension. Notice that I referred to as the University of Toronto pension. Believe it or not, for that group of people to renounce, if they're a covered expatriate, the full present value of that pension would be included in their U.S. income on the day before they renounce and subject to a one-off tax.
Sounds like a clear bias against U.S. citizens living abroad compared to citizens who have lived and worked in the U.S. Now, we've talked about the American citizens abroad and their fine efforts. Are there other organizations out there that should be recognized for their efforts to improve the tax system for Americans abroad?
Yeah, I would love to do a shout out for some of them. I mean, one, clearly would be the Republicans Overseas Organization, who, I mean, was run by Solomon Ewe, and I worked with Solomon Ewe for a couple of years. And they were very, very much a contributor to Representative Holding's bill, which was introduced at the end of 2018. So there's no question that Republicans Overseas deserves a shout out on this. I also think that I'm going to give a shout out to an organization that I'm part of that was recently founded, SEAT Now. SEAT stands for Stop Extraterritorial American Taxation, which is an organization founded to focus exclusively on this problem, which is important. I think obviously it would be remiss of me to leave out some of the work done by the Democrats Abroad Tax Committee, although I don't think the organization itself has had the commitment to ending this that clearly Republicans Overseas has. I do think that members of the DA Tax Committee, have done a good job.
I think another, to me, issue that's looming in the future is the infrastructure proposals that are connected to the increase in taxes that are being proposed, whether that's the capital gain tax increase or doubling GILTI. During the 2 years I lived in Singapore, I wasn't using U.S. roads and bridges very much. And the Democrats abroad actually wrote a letter recently to members of Congress suggesting that expatriates not be forgotten as part of the spending bill. Are you concerned that U.S. citizens abroad might need to help pay for an infrastructure bill that they get little or no benefit out of?
Well, it's obviously just one more example of extreme injustice, but I'll give you a comparable one that, people talked about earlier, but, nobody seems to talk about it anymore, is why should Americans abroad be subject to the 3.8% Obamacare surtax? And by the way that's written, as you probably know, in the Internal Revenue Code, is specifically to exclude the possibility of a foreign tax credit to get out of it. So this is standard fare for the United States. I mean, let's not kid ourselves here. The United States tax system was never intended to be a benefits-based system at all. And I wouldn't be surprised if a good number of people in Congress think that it's probably a good idea to impose taxes on the politically powerless.
John, and you mentioned, alluded to a little while ago, FBAR and FATCA. Maybe you can tell the viewers what FATCA is and why it's causing a lot of strain on the relationship between expatriates and foreign banks.
Well, FATCA is a lot of things. And when it came out, interestingly, I think it was at NYU Law School ran a symposium, or some law school ran a symposium on it. And one of the speakers said, FATCA it's the gift that just keeps right on giving. And part of the reason for that is the number of ways that it affects people's lives. Now, the first thing that it has done is obviously dramatically increase the awareness of, one, people being U.S. citizens, and two, citizenship taxation in general. I mean, I can't tell you how many people over the years, like calls I've received, oh my God, this can't be true. How can I be subject, to U.S. taxation? So the first thing it's done is increase the awareness, and there's absolutely no doubt in my mind that what it has actually done also is increased, not as much as they would have liked, but it has increased, people living outside the United States filing U.S. tax returns. So the first point I would make is that what FATCA has done is literally expanded the U.S. tax base into other countries. I mean, this is incredible. I remember a professor saying 10 years ago, well, we need FATCA to protect the U.S. tax base. Absolutely not. One of the effects of FATCA is to expand the U.S. tax base in other countries. Two, how do they do that? Well, what they did through the IGAs was they got countries to agree to change their domestic laws in a way and for the sole purpose of denying a specific group of people, which is anybody who the U.S. defines as a U.S. citizen, rewriting the laws to deny that group of people from the normal non-discrimination rights and privacy rights that everybody else has. And that, by the way, isn't part of the basis of a lawsuit going on in Canada, which I've been involved in, against the government of Canada. So that's the second thing it's done. It's exported U.S. law to other countries. The third thing it's done is, particularly in Europe, I mean, there's all kinds of people who can't even get a bank account anymore because they're suspected of being a U.S. citizen. I mean, this is over the top. Imagine you're in Europe, you're a European citizen. Sorry, buddy, you can't have a bank account here because you were born in the USA.
Well, I think that there's this perception that's been given that people making under $400,000 wouldn't feel, the brunt of all of these tax law changes. And as I recall, the Democrats abroad had a survey, they do a survey every year, and that the large majority of expatriates living outside the United States are making $80,000 or less. So you would think that expatriates generally would be somewhat of a protected class with respect to this tax reform. Do you anticipate that they're going to get the light touch when it comes to these changes?
Oh, absolutely not. In fact, it is the exact opposite. If you were to watch the Senate Finance Committee hearings that have been going on since March 25th, they think they're talking about corporations, right? This is what they think they're talking about. The language is in terms of offshoring. By the way, all Americans abroad live offshore, just for the record. Okay, offshoring and corporations. But what they don't talk about is the fact that anytime there's a change in corporate tax rates or the CFC rules in general, these things are going to have a direct impact on individuals who engage in these kinds of activities. And a very large number of Americans abroad do run their very small business, be they yoga studios, pizza delivery, whatever it is they're doing, accounting practices, through things that the U.S. does define as controlled foreign corporations. So I want to be very, very clear on this, very clear. The discussion that has been going on in the Senate Finance Committee up until now will have a profound effect on Americans abroad. I would also add to this Elizabeth Warren wealth tax, in its plain terms, the way it is written, is to include, sweep in assets owned by Americans abroad that were acquired after they moved abroad. And because of the interplay in these marriages between a U.S. citizen and a non-citizen, it is very easy to see and anticipate that what this will also do is bring the assets of non-U.S. citizen spouses within the purview of this wealth tax. And also, people say, oh, well, the moment we're talking 50 million, don't kid yourself. This will be coming down. It reminds me very much in the 1996 discussions about what has now become the Section 877A exit tax, when Senator Kennedy, bless his heart, actually had the temerity to refer to this as the billionaire's tax, when in fact, the primary people impacted by this are middle-class Americans abroad who have a pension. So absolutely, yes, they're affected by this.
And I want to pick up on something you said about the U.S. tax system's application to foreign small businesses that are organized as corporations or per se corporations. The last 4 years have not been kind to U.S. citizens with foreign corporations. You had the 2017 transition tax, the enactment of GILTI, and the prolific expansion of U.S. tax reporting requirements for foreign business activity. The combination of these provisions, John, is already draining the working capital out of many foreign small businesses. And now the Biden administration wants to double the rate of GILTI tax. How are Canadian small businesses being impacted by all these rules?
There's absolutely no question that it's destroying them. See, here's the thing, that corporations play different roles in different tax systems. In Canada and in many other countries, corporations actually double as private pension plans. And for example, with doctors in Canada, instead of they get paid from the government according to some kind of a schedule. A few years ago, instead of getting a pay increase, they were given the opportunity to incorporate their practices, right? Which they hadn't, and this is a way of, basically providing a private pension for a group of people that otherwise would not have access to a pension. So the bottom line, I'm going to make this real simple for listeners. These U.S. tax rules are simply confiscating their pensions. I'm going to say it again, confiscating their pensions. I'll give you an example. after this stuff came out, I had a discussion with, and this is an example I often use, a medical doctor in British Columbia who, just retired. He was around 65 or something. And over a 30-year period, he had managed to accumulate, $3 million, I think, in a small business corporation, which was really his pension. And he was going to use that for retirement. So then the 965 transition tax comes along, says, hey, buddy, you got to hand over, what would that be? Which say 20%, $575,000. He's just, where does he get that money? The answer is he liquidates the corporation. Or in his case, what he did, if you can imagine this, after all these years of working and trying to be financially responsible, I think what he did was put a mortgage on his home. I don't know how he's going to pay it in order to pay this. Again, I want to be very, very clear on this. These U.S. tax policies are confiscating the pensions of Americans abroad. No ifs, ands, or buts. That's the simple fact of the matter.
Now, I wanted to, while we're talking about business taxation as well, give a shout out to Monte Silver and his tireless efforts to reduce the U.S. tax burdens on expatriate-owned small businesses. Monte is a citizen of both the U.S. and Israel and provides legal services through an Israeli corporation. He sued the government last year to try to get targeted relief for both the 2017 transition tax and the GILTI. It's tough to take on the government, but he continues to fight like a boss. We have a link to his website where he's raising funds to continue his noble efforts. John, you've been on webcasts with Monte. Do you share his hope that the IRS will provide some relief to foreign small business owners, expatriate small business owners?
Of course, I share his hope, and I fully support Monte Silver. I think that he has done and continues to do a tremendous job, and I think that all people concerned about this issue should very much appreciate his work. At the end, I think that the long-term prognosis for this stuff is probably good, but it is going to take time. And what does that mean for people who call me and want advice? I think they need to get out of U.S. citizenship as quickly as possible. Because although at the end of the day, I have full confidence that the efforts of those who are trying to get rid of the extraterritorial tax regime, and there are definite groups who are working on this, and also people like Monte who are working at this in a more targeted kind of way from, shall we say, an administrative law point of view. I think they're going to succeed, but it is going to take time.
Well, that leads to the final question. The Expatriate Advocacy Group in Canada is named after Sir Isaac Brock. According to the group's website, Sir Isaac prepared Canadians for war with the United States and gave his life in repelling a U.S. invasion in 1812. The Isaac Brock Society exists to provide expatriates with resources and strategies, comfort, and advice. What comfort is available to expatriates when it comes to their U.S. taxes in the year 2021?
There is no comfort in terms of the tax rules themselves to U.S. expatriates. The ones who are in the best position are the ones who don't understand the rules and couldn't even imagine such rules exist, and don't have access to advisors who do understand this stuff. Now, one of the problems with being in Canada is that there are a lot of advisors who understand these rules very well, and therefore I would have to believe that people in Canada probably are far more compliant with U.S. taxes than perhaps in other countries, simply because there's greater awareness of all of the requirements. But just talking about the Isaac Brock Society here for a second, that was formed in, I believe it was 2011, at really the height of the Obama vicious, unprincipled, unprovoked attack on Americans abroad. It was an incredible time where, the media, the tax compliance community was, basically preaching this gospel of fear. And the Isaac Brock Society was formed, and I really think that it was an oasis of calm, reason, and education in a storm of just, U.S. aggression fueled by the media and that. So that's been a very, very important organization, more so in the earlier years. And, I don't know I don't think I know personally all the people who founded that, but I will say this, that I regard them as sort of the equivalent of the founding fathers of the United States in terms of what they were able to do. To this day, there is no site that contains the volume of research, the sort of meticulousness of discussion on these issues. And so it has been a very, very good source of education, I think, comfort, and, a meeting place, I suppose, for, people whose lives have been turned up and down by these issues.
If people want to pick up essentially on the thread here and begin to be more active with these expatriate issues, are there publications or places they can go to get up to speed?
Well, the one that comes to mind for sure would be American Expat Financial News Journal, which is AmericanExpatFinance.com, which is run by Helen Berghoff. It's been around for a couple years. It does absolutely fantastic first-rate coverage of these issues. And, that's a great place to get what I would call a Reader's Digest sense of what's going on. So absolutely, American Expat Finance would be one.
I hope we've helped our audience understand the current state of affairs, challenges, and near-term outlook of taxation of U.S. citizens abroad. There are many good people and organizations working to alleviate the expatriate tax burden. We are grateful to have heard today from one of the loudest voices, John Richardson. We've linked to John's Twitter feed if you want up-to-the-minute tax and other developments impacting U.S. citizens abroad. I hope you have enjoyed this episode of Taking Shelter. I'm your host, Peter Paulson.